I'm Bob Bush. I'm a volunteer from AARP, and today I'm going to talk about credit. I do a lot of speaking on fraud, and some of you I recognize some of your faces, but today we're talking about credit. And the reason I got involved in this, I said, I don't really understand the whole credit thing, and I want to know more about it. So I did some studying and put this presentation together. So anyway, a couple of some questions. Let me get this light off a little bit here. It's kind of bright on the screen. Bear with me for a second. If I can figure out which one it is. That's it. Okay. What is a FICO score? That's your credit rating. How's it figured out? What are your rights as far as a customer, a consumer? How do you freeze your credit, which I'd recommend you to do, and how do you improve your score? That's what we're going to talk about today. So it's all about how you as a customer or consumer can understand your credit rating and know some of your options. First thing, we've got to define what it is. And this is kind of interesting. FICO scores is developed by the name of it comes from this company, Fair Isaac Corporation. Pretty strange name, huh? Fair Isaac, what's fair about it? I don't know. Fair Isaac Corporation. And lenders use it to test your credit worthiness to see if they want to loan you money, or give you a mortgage, give you a car loan or something like that. So that's what it's for, and it's basically a measure of how you paid back your money that you owed over time. And it ranges from 300 to 850. And here's some, in your 800 level, you're exceptional and you're very good here, and you don't want one of these. So, there's the scores. So you want to be in that high area. If you're in that excellent zone, what does that give you? Or even the very good. When you go to get a credit card, if you need a credit card, the credit card company will give you the lowest rates that they give to the public. If you're a poor risk, they're going to put the rate higher and you're going to pay more. Same thing with banks for mortgages, car loan companies, and so forth and so on. So it's good to have a high credit rating if you want to borrow money to live for whatever you need to do with it. Okay, FICO scores are used for loans, interest rates, get at lower interest rates, credit limits, rental. Your credit card's got a credit limit on it. You can see what it is. And the better score you have, the higher the bank will put on your credit limit. Is that good? Well, I don't know. Banks want you to borrow more money because they make money off it, don't they? So anyway, rental application, probably this is not so important to you, the unemployment part. But this is a big one now that employers are looking at people's credit ratings to see if they want to hire them. Why do you think that is, Terry?
Do they pay their bills?
Do they pay their bills? But what does that show about there you go, it's responsibility. Is this person a slacker and paying their bills? It's Joni. You probably don't want to hire them if they're dodging all their bills and so forth and so on. So anyway, that's one that kind of surprised me. Here's what it's based on. 35% is your payment history. Did you pay off your bills on time? That's a little more than a third. The second one is credit utilization. The ratio of the credit card balances to credit limits. Whew, boy, what does that mean? If your limit, let's say your limit on your credit card is $1,000. I'm making this up. And if you have generally your outstanding balances are $200, that's okay. Once they get about, say, 30%, the half of your limit on your card, you keep having those balances by not paying it off. That's a flag that you're a credit risk. Let me say that again. If your credit limit was $1,000 and you typically run a $600 balance every month because you don't pay it off in time, I'll pay that next month. That's a flag that you're a risk. So that's what all that googly got means. It's just the percentage of your limit, what your balances normally are. And the length of your credit history, how long you've been a borrower. So somebody that's just out of high school, just out of college, that has never borrowed any money, the lenders look at that like, we don't know, you don't have a record. So that's that 15%. Here's some more. Credit mix. The types of things Do you have a mortgage? Do you have a car loan? Do you have credit cards? Do you have other accounts? So, and then new credit. New credit is 10%. That is recently opened credit cards. If you keep those people that don't pay off their credit cards on time and they get real high and they open another credit card and another credit card to keep running up their credit bill, that's what that new credit thing is there. So we're going to talk about that. And that has to do with hard inquiries and soft inquiries. And we talked about over here just a minute ago. I think the gentleman here was talking about it. So thanks for your service, by the way. I'm a 26-year disabled veteran, so thank you. Soft versus hard hit, what does that mean? Soft inquiry is when someone checks your credit ratings and you aren't doing something. All right, the difference is who initiates it. If say an employer got checked on your credit rating, or a landlord to see if they wanted to rent an apartment to your house to you, that's called a soft hit. You're not doing anything, somebody's just checking on it. So that is not a penalty to your credit. This is kind of interesting to me. I didn't know this until I started this presentation. That's not a penalty to you because you haven't done anything. It's just somebody asking the question. Doesn't hurt you, doesn't lower your credit rate. That's called a soft hit. Okay. Soft inquiry is when someone's checking you check your own credit score, somebody looks at your employers and so forth, and you account reviews by existing creditors. You got a credit card with a bank, and they just take a look to see how your credit rating's going. So maybe they want to offer you a chance to get a higher total for your credit card. Those are soft hits. Those are okay. Those don't hurt you. They have no impact on the credit score, and who can see soft inquiries? Only you can see those in your credit report. If you look at your credit report, like if a creditor looks at your credit report, they can't see all those soft hits. They aren't visible to them. That's not there. They can see all the hard hits, which I'm going to talk about in just a minute. But the soft hits, they don't see them. So a hard inquiry, a hard hit, that's where you are doing something to initiate a loan or a car payment or a mortgage, a mortgage or something else, getting a new credit card. You are the initiating person that goes out and says, I want to do something and have someone lend money to me. I want to borrow money. That is a hard hit. That's when that company will go in and say, okay, now we're going to check your credit rating. So you're applying for card, mortgage, and so forth. Running an apartment in some cases. So that's a hard hit. What do? They lower your score slightly. Why? That's kind of a strange thing, isn't it? Why does the company ding you for these hard hits? Because if you always out there inquiring to get new credit cards, it signals to the credit people out there, the lenders, that you are trying to cover your past debt by getting more debt and more credit cards, and you're not paying off those behind you, you're just getting a new credit card because the other ones are maxed out. So that's how that works. Who can see it? Anybody can see that who looks at it. Lenders can. So if you have a hard hit, other lenders can go and say, well, this guy has applied for 7 different credit cards this year and no one's given him one, so now he's applying to us. So what are you going to think? But I'm not giving him one either. So that's the difference between a soft hit and a hard hit. And here's a little chart. Wonder what that is. I don't know. Nothing I've done here. Oh, anyway, soft hit. Non-lending purposes, you're just looking at something. A hard hit, you are applying for something. You are asking for a evaluation of your credit rating, and that has a small negative impact. What's the last one there? Visibility lenders, yes, that can be seen. So those are the ones that can affect your credit. Hard hit. Only apply for a credit card when you're necessary. You don't need 9 credit cards. Keep 1 or 2. Get rid of the rest of them. Rate shop smartly for loans like auto and so forth. And what they say is if you're going to go out and look, let's say you want to get a mortgage, and you start asking and you check with several different companies, the credit company, the credit card rating company, then looks at that and says, that's okay, you're just looking for different loan rates if they're bunched together in a close period of time. And in my search didn't tell me what the close period of time means. But I mean, if you're looking to buy a house, you're looking for mortgage rates and you're shopping, that's okay. But if you do one year and one the next year, that's not. Monitoring credit reports. This is probably one of the most important things that in this presentation is to show you how do you look at your credit reports and know when there's something on there that's not correct, that's causing you to get dinged in credit report. Okay, how do you check it? And let me see if I can figure out how to get rid of that. I don't know how to get rid of the little sign up there. Something back in the computer room, but I'm not going to worry about it. There are 3 companies, and they're called credit bureaus. And they gather this information, and they pay attention to it. And they are 3 separate groups. They're separate entities, and they're commercial companies. So these 3 commercial companies really determine your life as far as loaning and so forth goes. That's who has control of your situation. So I'm going to talk about them. They are these 3, Equifax, Experian, and TransUnion. You may or may not have ever heard them, don't know, but those are the 3 companies. So let's talk a little bit more about that. There's the website and so forth. If you just Google credit companies, you're going to get all 3 of them. They'll all pop out. I just put them up there on the sheet so you can see it. All right. You are entitled, everybody is entitled to 1 free annual credit report from each of the 3 companies. 1 free credit report per year. Everybody is entitled to one. If you want more, you're going to have to pay, like everything else. But you're authorized 1 free credit report, okay, every 12 months. You simply contact the agencies, and you can also just Google free credit report, and you're going to get a chance to get one. And that's not with a particular agency, that's through a government agency that controls that. So, thank you. So the free credit report, everybody can get one. You can call, you can do an email to them, whatever you want to do. If you won't remember that, so just Google free credit report and make sure you're not clicking on a site that's a spam site. So be careful with that, and you get a free credit report. Tips: review all your 3 reports. Each bureau may have a slightly different number for you. Review them and see what's there. Look for errors. What do you mean here? Well, check for things that's wrong. If they say you took out a loan and you didn't pay for credit on a credit card, you go, I never had that credit card. You can contact that credit bureau company and say, I never had that credit card, and submit a request to have that taken away and taken off your record if there's an error. So you need to look at it, check them periodically, and monitor them and make sure that everything is correct on there. Now somebody, I can't remember who was talking just a few minutes ago about there was an old debt on there and it was dinging on the credit report. Who was that in here? Maybe that person left. I don't know. Somebody was telling me that. So what about locking? I personally recommend that you lock your credit report. What does that mean? You put a hold on your credit report. Nobody can get a credit card, take out a car loan, get a mortgage, do anything else, get a bank loan on your name because your credit is locked. That's the plus side. What's the downside? You can't get a new credit card. You can't get a car loan. You can't do anything else until you take the block off. But the block does prevent a scammer from using your name to get credit cards and running up a bunch of bills that you don't know about. I personally have my credit cards locked. Oh, let me cover one other thing. If your credit card is used fraudulently and you call and contact the company and they cancel your credit card and send you a new one, that doesn't count. Since you are already established with the credit card company, that doesn't count as getting a new one. I'm talking about you have a Visa here and I want to get a MasterCard, American Express, and you want to go out and get a new one. So that's to see the difference. But if you don't worry, if you cancel your credit and if something happens to your credit card and they have to send you a new one, no problem, because you're already with the company. Okay, clear enough? All right, Lock your credit is a good way to stop from scammers from getting into, and it limits the flexibility. You can't get into credit cards, as I said. So that's the. I'm going to tell you in just a minute. Okay. Good question. Great question. You led me right down the path. Steps to lock. See right there. Steps to lock your credit card. Go to the website, create an account, log in, and you put some information in there, and you log in, and you get you set up an account and a password, just like you do for everything else. You have an account and a password, and you tell them on the computer or by telephone, lock my credit, and they give you a PIN, 406728. You put that somewhere that you're going to remember it, because when you want to unlock it, you got to have the PIN to unlock it. So they give you a PIN, and your credit is now locked. You don't have to. My credit's been locked for 5, 6 years. I don't know. It's a pretty long time. I've never had to unlock it. I have the pins from each. You have to do it for each of the companies 3 times. They're separate. You think that you can do it just once. No, it's not that easy. You have to lock it with 3 different ones. But I don't know this, but I think if you locked it with one, when anybody went to check your credit, they would see it's locked on one of them. They probably wouldn't do it on the other one. But I don't know that. I just locked all 3 of mine. And I have a file in my file cabinet with my pins on it. So if I want to unlock them, I just go in there, get the pin out, dial up the thing, put my password, put the pin in, unlock the credit. So not too hard. Keep your pin, keep your pin and know where, and your password and your login words. So have those in a file somewhere and just stick them somewhere you won't lose them. Okay, this is a change the subject. How can you improve your credit score? How can you make it better? Everybody wants to have a credit score that's higher. It's kind of like getting do you want an A on that in this class, or do you want a C? Everybody wants to get that higher mark. For those of us that don't borrow money, it's really not too important. I mean, I haven't been too concerned I have a high credit rating, but I haven't been concerned about watching it weekly or anything like that, because I don't care. My mortgage is paid off, my cars are paid off. I have credit cards, I pay those. I don't really care about, my credit score particularly. So, but anyway, my credit's locked. So criminals can't go after me. It's time consuming, and you have to be consistent if you want to improve your credit score. It can greatly increase your opportunities to buy a car, buy a house, get bank loans, anything else where you want to borrow money. It's very important, as you can tell by looking at this session here. So, first thing, pay your bills on time. Don't have a credit card with balances on it. Pay your balance on your credit card every month. Pay it down to 0. Don't keep balances. Remember, that's about 35% of the total is paying off your bills on time. So pay them, set up automatic payments. If you miss payments, go back and try to pay them off as soon as possible. So basically, be a good consumer. Someone is paying off your credit cards in a timely manner. The credit card companies like that. Reduce the balances, okay, 30%. Remember I talked about that 30% was if you got $1,000 total on keep your account balances below $300. Don't let them get higher than that. So if you had a $500 balance, at least pay off $200, because that'll get you below 30, or $250. That'll get you below the 30%. Or ask for a credit limit. But don't do that if you have a tendency to spend so much money, right? I have a couple different credit cards. One of them has a huge limit on it, but I didn't ask for it. They just gave it to me. And the other one has a small limit on it, and I'd like to raise it, but you know what I have to raise it, what do I have to do? I have to unlock my credit again. So I don't care. I don't put that much money on my credit cards. I just don't worry about it. Okay. Don't keep old accounts open. Even if you have a credit card and if you close them, it's a hit. It's a hard hit by closing a credit card. If you keep them open and just don't use them, so cut them in half and put them in the shredder, just keep the account open until the company says we're going to close your account because you haven't used it in 5 years. So that also helps. Avoid closing all credit cards, and maybe use older accounts occasionally to keep them active. Dispute errors on your credit report. If you look at your credit report and you get this annual free report, look at it and see if there's things that you think are wrong, and get a hold of the company, and each of them have rules like they have to answer you back within 48 hours. I don't know all of them all, but they generally tend to answer you back because it's their business. And if you say, I have an error here, they'll research it, and they'll try to recover that. So anyway, dispute errors with the credit card bureau that has them. Because remember, there are three different groups. It may be on one bureau, Equifax, and not Experian or TransUnion. It may not be on the other two. So it may be only one of them has the error there. So anyway, it's important to take a look at that. Be patient. If you're trying to improve your credit score, it's going to take a long time. Why? Because they're looking at your record of how you pay off your bills. And they're not going to look at, oh, he's paid off this bill this month. No, they've got some period of time that they're looking at. You know, different banks may have different amounts over the last year, the last 2 years or 3 years, or whatever it is. So it's going to take a long time. If you watch TV, they have these advertisements. So improve your credit. You know, you can do it instantly. No, you can't. It's going to take you 2, 3, 4 years to improve your credit, have a consistent record of you paying off your debts in a timely manner. So that's probably the most important thing. And typically after 7 years, things kind of fade off the edge. So I guess they start wiping things out at 7 years because they consider, I guess, the statute of limitations for credit cards, if you will. I use that statement. But they'll start deleting them after 7 years. With time and patience, you can raise your credit score. Simply paying your bills, keeping the credit limit, 30% of that credit limit on that credit card, keep your balance below that. But essentially those are, and don't randomly keep getting new credit cards. You don't, my personal perspective, you don't need them. And that's just more of a target for scammers. The more credit cards you have, the more chances you have of being scammed. So maybe just keep it down to a reasonable number. And I personally have two, and I check them. I have a tradition every Sunday, I open the bank account and I check my credit cards. You know, I have electronic banking. Yes, ma'am.
Bob, I want to go back to where you are Bob and Bob.
Yeah.
I wanted to go back to that. Why is it if you have an old, like we have a GM card that we haven't used for years and years because we're not trying to build up money for a GM card. Why is it more beneficial to just let that be in there than it is to close?
I haven't found a real good answer. I asked the same question. Now, why wouldn't you just close it and not have it, and you just don't have less cards? But the credit card companies, apparently, the bureaus, apparently look at that and say maybe you're dodging something, or you've lost it, or they canceled your card. So I don't have a good answer to that. But my answer to that is, if you have an old one, get a hold of the company and just cancel it and be gone, because that is just, you get a little bit of a ding, but after, you know, a little while it goes back up. It's not going to hurt you a lot. I got rid of all my old credit cards. I said, I don't care. I'll take a little bit of a hit, but it doesn't bother me. I don't want the chance having a credit card, have somebody get a hold of that number and start using it. So I would rather not have the card, take a little hit from the credit bureau for canceling the card, rather than have that opportunity for a scammer to use it. So, you know, and remember, we're talking about freezing your credit. That does not stop somebody from stealing your credit card number and using it fraudulently. That only stops people from getting a new credit card or getting a new mortgage. So, okay, here's an example. You've heard about people that steal your house, basically. You've heard about that, right? Where they go in and they fraudulently do these documents, take them down the county file, and now they own your house, and they go out and get mortgages in your name. If your credit's frozen, they can't get a mortgage in your name, so that stops that. Now, there are probably other nefarious things they can do with this information, but to me, one of the biggest things I think of protecting yourself is freezing that credit on all three companies. Because then nobody can go out and do something new and incorrectly use your name to get your credit card, a car loan, or something else. So, you know, that's my advice to you. I've done it. It works fine. Again, I'm not one that I'm not buying a new house. I'm not buying a new car. You know, if I ever buy a new car and I want to use a loan, then I probably have to unfreeze my credit. I got my PIN written down. Just call the company, tell I want them to unfreeze it in bank, and as soon as that loan goes through, I'll just freeze it up again. Well, I think, to me, that's probably the most important thing out of this whole session is look at your credit periodically, get a free credit report, and then freeze your credit. And then nobody can get to you that way. I'm so, after teaching fraud as much as I do, I'm so cognizant of the fact there are little ways to get into your finances, and that stops one way. They can't do it. So those AARP's got a whole bunch of stuff. I'm not telling you how to be a member of AARP. If you are or you're not, I don't really care. Either like the company or don't. Anybody could use it. There's a whole bunch of stuff about credit reports. You just Google AARP credit reports, and you're going to get all kinds of information, 5 ways to boost your score and so forth. Some of the information I took from this presentation is right off the sites there. So, don't have to be a member. Just Google it, AARP credit rating or something like that, credit reports. You're going to get more than you have time to read, I guarantee you. And some more. When to freeze your credit, how to do it. Somebody asks, how do you do it? Well, if you want to have the steps, that's it. You basically call the company, or you use the internet to get hold of the company, put yourself an account, and give yourself a password, and then close your credit, and they'll give you a PIN. That's pretty easy. Pretty easy. And that's it. All right. Questions?
You can also lift your freeze for a period of time, too, like
Yes.
if you figure it
Well,
out.
I think you have to, yeah, you have to lift it. I don't think, to my understanding, you can't lift it and say put it on a week. You lift it, and then you go back 2 weeks later, and I'm done with that, and you put it back on again. So it's not take it off for the next 3 weeks. It's take it off, and then it's like a light switch. It's either on or off. You don't say, turn my light on at 3 o'clock, right?
Yeah, the last time I had to do it, I thought it automatically went back on.
Now, maybe certain companies do, I don't know. So,
It was all 3 of them.
okay, well, maybe they got something to turn it back on again. Yeah, so was it pretty easy to do?
Yeah,
Yeah.
it wasn't hard.
So I've never looked into that feature, to be honest with you. To be honest with you, I have not turned my credit card back on, and my credit rating back off the lock. I haven't taken the lock off since I put it on there several years ago because I haven't had the need to. So, because I've had my credit card scammed. They just gave me a new card, but again, that's not part of the lock business. Yeah, yeah.